What's going on, everyone? Happy Wednesday. It's July 31st. Today is Fed meeting day. I apologize for being so casual today. Today was the start working at the kitchen counter and never get up day. So it's 4:30. I needed to get this video done. The number one question today has been, Sean, the Fed lowered the rates by a quarter. Did my interest rate go down? And the answer is no. And if you reference last week's video, which I have right around here somewhere, you'll see that we already knew it was coming. We knew there was going to be a quarter reduction. So let's jump straight into the data and take a look at what has happened as a result of the Fed lowering rates 0.25% today. All right, so as always, we are looking at the 10-year Treasury. If you're not following this yet, follow it on your stock app. It's the most readily available information you can use to get a very decent gauge of what's going on with mortgage rates. So what you can see is over the last 3 months, rates have been coming down. And what you can see most recently is that here we are today. So over the last, 10 days, 8 days, there hasn't been a lot of movement because we've been waiting for the Fed announcement. And sure enough, the Fed announcement was as expected. So nothing changed, really. Nothing special changed. Just wanted to draw that line so you can see the pattern that we're looking at. So the good thing is that the 10-year did end below what I've called like our floor, what's been stopping rates from going lower. And so this is a good thing that we ended the way we ended today. It means that rates could potentially get better. And what you'll see here is our next floor is at about 1.95. So we have some room to potentially drop below 2 again. We've been there before. You can see that we were there on earlier in July, earlier this month. But that's kind of what happened. So big news, not a big deal because we already knew it was coming. Now let's go behind the scenes and take a look at what mortgage-backed securities are doing. This is going to be inverse of what you see on the 10-year Treasury. So with mortgage-backed securities, let me get rid of all these lines, as interest rates drop, mortgage-backed securities increase. So an upward trend here is a good thing. Now what's really interesting is you see basically the same pattern. We can draw a line right here and you see a floor, right? We've been bouncing off this same pattern we saw in the 10-year. But what I think is funny, and I don't know, maybe I'm a data geek, but I love the mortgage-backed security line for today. So what this line means is that when the news came out that they were lowering rates a quarter, we got a good bounce off of that. And we got up to about 102.45 with trading. 102.5 is where we got to. And then the meeting kept going, and at some point it went way down. So we had about a 30 basis point swing in pricing today as people were listening to news. And where did we end? We ended flat. I mean, if we take today and just split it right down the middle, we're literally right in the middle of this pattern we've been seeing. So what does this mean for interest rates? It's exactly what I said last week. We knew it was coming. There was no surprises today. We'll see what tomorrow is. We might get a little bit more of a bounce tomorrow for better interest rates, but we knew it was coming. So the Fed announcement today wasn't that big of a deal because, again, we knew it was coming. And the comparison I made last week was, think of it like a stock. If you own stock in a publicly traded company and they said today, hey, in about 6 months our earnings are going to be awful, we're probably going to be doing a ton of layoffs. Would you sell your stock now, or would you wait until the news if you know that's coming? You and everyone else would sell it. You would react to the news. And that's what we do here. We react to the news. We already knew it was coming. There was no surprises today. It was as anticipated. So I knew that we wouldn't see a huge change in rates today. So I'll keep you posted. We're going to do this every week. If you have any questions, comments, concerns, if you want to know more about what's going on with rates, let me know. Remember, a mortgage rate is a means to an end. If you buy today at a 3 7/8 interest rate and rates go to 5%, you're really happy you bought when you did. If you buy today at 3.875 and rates go down to, 3.5, you can refinance. You're never stuck with the rate you have. You can always refinance and take advantage of the market. So do not let mortgage rates stop you from buying a home. Let me know how I can help. Thank you guys so much. I'll talk to you next week. Cheers.